In this video, I want to talk a little about order flow. I'm looking at a Euro chart for hourly, and I want to highlight to you that gaps are also these wicks. Okay, the wicks are just another way to visualize a gap. So include wicks when you are trying to identify order flow. So wicks on a hourly chart are very powerful. You can see here we are supporting price and look for the midpoint of the wick. You want to see price remain above the midpoint of the wick. That indicates strength. Okay, so we can see price here has supported, we're moving up, and I then simply continue on that process. So here's another wick. Okay, you can see price has supported there as well. So it's like a stepping stone, right? We're going higher in price, and that's essentially how I identify order flow. This is a wick also. We'll see where that, if anything is coming to that into the future. Okay, these wicks on the top are also important. Okay, let's draw this one out. Okay, you can see price is supporting at that level as well. Again, the midpoint is what's important. You want to see price remain above the midpoint. Okay, these gaps are also important. Okay, so draw out the gaps as well. You'll see that price, in most cases, you look at the bodies of these candles, they are supported above the midpoint of that gap. That's important, right? So we continue along. We will, sometimes these gaps that are not traded immediately are traded in the future. So we'll look at those. Let's also mark out this tiny gap here. Okay, let's mark that out there. Let's see here. There we go. So we can see in this case it's gone through. Okay, that's okay. Let's look at, you can see this one here that we drew earlier has found support on this candle. Okay, let's look at some of these gaps over here. Okay, let's look at this gap over here. So the idea is for you to just draw these gaps and watch them. Okay, all you need to do, so obviously we're doing this in hindsight, but this is how you learn. But when you're looking at your charts in real time, whenever you get a gap, just mark it out and see where does price come, when does price come into that? What does price do when it comes into that gap? So here we've marked out a gap. Let's say we're here. Price is coming down back into the gap. You can see it's offering resistance. Okay. Here we've marked out a gap, and then once price comes in, we can see it's offering support. And so that's how you use. You can see this gap here. If you keep going across, it's also offering resistance. Okay. Notice that in here the body did close above and completely fill in the gap. Here the body candles remained in the midpoint of that gap. So that was more of a stop hunt, right? You can see it's gone above and swept those highs. So you can use that as confluent. This gap's already, this inefficiency, which is the gap, it's been balanced. So why is price coming back up here? Well, most likely to sweep these highs, okay? And coming back down, price will always come back down to a gap, and you will see some level of reaction if for the first time it's coming into that area, okay? And then bounce from there, okay? So it's bounced from here on this support level, and you can see there's a small gap there. Use that, okay? So here you can see price has come into this, and that's where we found support. And again, we've come into this level, this gap from previously, acting as resistance again, and again we're coming back down into this level. This time not coming all the way down. Maybe there's a small gap there. Okay, so this time we've gone through that gap. Let's mark out this one. Okay, this is how I use these gaps. You can see it's resistance in the future, right? So now we've come into a significant high. Let's have a look at what is this high. Maybe we can go on a daily chart and have a look. What's that 1.09? Okay, let's look at a high time frame to see. So here we are. You can see it's coming to this gap, right? So let's draw this out. So previous gaps are important into the future. Look at that, right into this gap here and coming into the midpoint, right? Not being able to close at the midpoint and finding resistance there at an old gap. That's why the gaps are important. Let's go back to the hourly chart, okay? And that's how you identify order flow. So that was an important level that we've come into on a daily chart. It's taken all that liquidity and come into a daily chart, previous gap, and I've shown you. And now all these previous gaps, you can see it's offering a small level of resistance by going straight through, right? Because now we've cleared all these gaps from the past, and we've got movement back into those. Okay, even this one here, we have movement back into that, so that's why we're going through them now. Okay, so this gap here, we've had movement into that, now we're going through that. Okay, so let's continue. So here's an older gap. Okay, we've gone through there. You can see we've got a small bounce, and then that acts as resistance. So when you do go through these gaps and the market comes back up, you'll often find that when you are on the other side, then that will offer resistance. So here's another gap. You can see we found some level of support on this one. It's bounced up back into this gap. Okay, and that also may be important to draw out this level. Okay, let's see if that was important, and you can see it's tapped just into that. So these overlap, right? You've got to have a look at where these overlap. So this is, and where it's supporting from this gap, which you can see hasn't been fully balanced. Still now it hasn't been fully balanced, just gone a bit lower to sweep these lows. And from there we've gone up, touched back into this gap. Now we are going down. Let's look at this little gap formed on the way down. Okay, maybe that's a bit too tiny, hard to draw that one. But you can see the market come right back up, and we try and draw that. There we go. It's just tapping into that one. Even though it's small, it's gone through. As it's gone through, made that gap, the market's tapping back up into it. That's where you can use these gaps to try and identify support and resistance levels. Here's the gap that we haven't. This is the wick. Nothing's come back into this so far. Right, let's just make this smaller. You can see this time we've come right into that wick. Right, so these are important because at some point in the future they'll get traded back into, and that will offer support. Now this is going back up into this gap, right? This movement is going back up into this gap here, and if you look at that closely, you can see it's tapping into this gap on the other side, right there. So if you had that on your chart, you would know to look for a potential resistance. Now, these aren't small moves. This is a 4-hourly chart. So when you're seeing support at this level, and you can measure that to there, that's 60 pips, okay? Now, if you combine that with the right day and the right time, this is obviously a 4-hour chart. You can see, though, it's within London, right? This is London, this is New York. So these are key reversal times, okay? What's this one here? This is also London, right? On Monday, okay? This here is New York, coming up into this, New York, okay? So these are key times. When you combine these levels coming into these gaps on the right days and the right times, you find that they are key turning points. That's how I use these gaps. I include the wicks, okay? Wicks are just another way to represent gaps. You can see that this is quite a significant level where we're still trading within. Okay, we've been consolidating at this low, and currently we've come into the midpoint of that. So we have kind of cleared this level and now trading above from the midpoint. And that was where, if we go back to where that gap is, that's kind of where this move started. This entire huge move started from here. So stepping stone up, stepping stone up, stepping stone up. Okay, what's it reaching for? Well, there is liquidity above there. So we're going above there and then coming back into a previous level of inefficiency on a daily chart, which was this one that I drew. If I go back and show you where that came from this reclaiming that gap there, right? The downside price delivery, upside price delivery, downside again, okay? And so from here to here, there needs to be upside to completely balance that. So if you had a balanced price delivery, but I think we need to have a balanced price range by moving up, okay, to balance out this last down candle, and that's where it's come back into that gap up here to do that. And I think there's still movement to come back up here because it's not fully balanced, okay? Let's go back to our 4-hourly chart. Okay, so now we look for something on the opposing end. As this moves up, it'll leave additional gaps. So we've still got to come back into this level. This is still open. Okay, so I'll put a line there. I think that will be the next draw on liquidity right there. That is 1.0780. Okay, I've already previously mentioned where I think euro is going. Have a look at the daily analysis video, or the high time frame analysis is what I think I call it. These gaps will be important in the future, right? I'm going to be putting them out into the future, so I know they are key levels. But right now, all I need to do is worry about these levels. That's it for now. Those few levels, this one in particular. Okay, then this one is all I'm concerned about for now. Okay, so the next time I look at euro and look for any entries, my target's going to be up around these levels. Okay, 107.60, that's at least 60 pips, and then further up to 107.80, and then further up to these levels. Okay, so that's how I use these gaps to identify order flow, and it kind of helps me be on the right side of the market. And even for scalp trade, it's great. I can take a scalp trade sometime next week, with an expectation that we're going back up to this level, or this level, or this level, or even higher over the next couple of weeks. Okay, so rewind the video, do this on your own charts, and mark out all the gaps. I've even missed a couple as I've been doing this live with you, but the idea is to mark these out and look at them, how price reacts from them, okay, so that you can trade in line with the high time order flow, and then also use them to mark out where, if you are taking a position or expecting price to move in a certain direction, where price might find resistance or support based on these gaps from the past. Okay, so I will now talk to you in a future video.